are based in Curitiba. Curitiba is usually a cold and very humid city in Brazil. So we were now we are live on YouTube, and I commenting on the climate of Curitiba. That's good. Diana, we can start.
Ok. Boa noite a todos e a todas. É um prazer estar aqui hoje, dando as boas-vindas em nome da Comissão de Gestão e Inovação da OAB Paraná. Eu sou a Diana Udri, para quem não me conhece, junto com o André, nós coordenamos um dos grupos de discussão da Comissão de Gestão e Inovação, cujo escopo desse projeto em específico, aliás, os grupos de discussão da comissão, é se tornar uma das referências quando a gente fala de dialogar direito e tecnologia. O nosso eixo temático desse semestre são Central Bank Digital Currencies, ou moedas digitais dos bancos centrais, CBDCs, para os mais íntimos, e hoje nós vamos ter a honra de contar com um painel internacional, que vai estar, né, sendo composto pela doutora Rosa Baresi, da Itália, doutora Helene Kim, de Stanford, Estados Unidos, e Bruno Salamana, é isso mesmo, né, Bruno? Bruno é brasileiro, mas é professor de Berkeley, e toda o nosso painel será em inglês, mediado pelo André Cardoso, a quem eu já, sem delongas, porque eu acho que estamos aqui para escutar a vocês, não a mim, já passo a bola e já passo a palavra, e um bom evento a todos. Welcome to everyone. It's a pleasure to stay here with our guests to discuss the theme that we understand that is one of the most challenging nowadays to discuss when we are talking about cryptocurrencies, DLT, because it's a point that we have to discuss a little bit about monetary policy, sovereignty, and other things. So without any waste of time, I pass the buck to my colleague, André Cardoso, who will mediate this meeting. Thank you very much.
Thank you, Diana, and especially we must thank all our guests today, Rosa Baresi, Helene Kim, and Bruno Salama. This is a good opportunity for the Commission, the Innovation and Governance Commission of OAB, of the Brazilian Bar, Paraná State Chapter, to discuss this important and hot topic of today. And I'm sure that we are going to have fruitful discussions and fruitful ideas and thoughts that we could arise from the discussions and could arise from the presentations made by all our panelists. And just to make to show the schedule and our agenda, we are going to have 20-minute presentations for each panelists, and after this we'll have some time to question and answers and for discussions. So feel free to send us the comments and the questions and the doubts that you want to address to all the panelists, and we will try to make these discussions live and try to make a fruitful discussion, a fruitful panel for everyone. And I think that the team CBDCs have gained a lot of tractions in the last months and the months preceding this debate. Probably because we have a very important phenomena. We are living, and this cartoon illustrates everything. If we were not able to transform, to make a digital transformations in companies and governments, this could be a very long transformation, a very long journey, the pandemics obliged everyone to take some new measures to respond to the pandemic and to make new ideas, to real. So we probably CBDCs is also a theme that we will rise and we will develop because of the pandemics, and this is good or not. We are going to examine all the problems, all the hurdles that are connected to the issues of issuing CBDCs. And with this, I pass the word, and the order of the presentations will be Professor Rosa Baresi, Professor Elaine Kim, and after Professor Bruno Salama. So I pass the word to Rosa Baresi.
Good afternoon. Boa tarde. My deepest thanks to André Guskov Cardozo, to Diana Undre, and to the Innovation and Governance Commission of the Brazilian Bar, Paraná chapter, for making this event a memorable occasion to analyze the central bank digital currency, and above all, to give me the opportunity to explain the need of a universal access device to store central bank digital currency. A year ago, nobody could imagine that research about the central bank digital currency may have had such a rapid development. And 2020 has pushed the attention to the issuance of digital currency by central bank. Some problems have already been solved. Others are still looking for a solution. Researchers and bankers know that the development of a viable digital currency will be a long process, and that is more reason to step up our efforts in that direction. So talking about the situation in Europe, we can say that in October, the Bank of International Settlement pushed and published a report jointly with a group of 6 world central banks, the banks of Canada, the European Central Bank, the Bank of Japan, the Bank of Sweden, the Bank of England, the Fed, and of course, the Bank of International Settlement, for developing a project on CBDC. Also in October, it was officially the start of the Eurozone, where the European Central Bank published a report on digital euro and opened up a public consultation about it, which is going to end in January 2021. We have to remember also that in September, the European Central Bank applied for trademark status on digital euro wording. The European Central Bank report examines the issuance of a central bank digital currency, so the digital euro, from the perspective of the euro system. Such a digital euro would be a central bank liability offered in digital form for use by citizens and businesses for their retail payments. So the European Central Bank was keen to differentiate the digital euro from crypto asset. They say crypto asset have no liability of any entity. So the digital euro would be available to the general public rather than only being available to the traditional participant like the typical banks. European Central Bank clearly pointed out that a digital euro should not aim to replace cash, but should be only be a complementary form of payment. By the middle of 2021, the euro system will decide whether to pursue a formal CBDC project. There are many reasons for issuing a central bank digital currency: complementing physical cash as a legal tender, lowering transaction costs, improving the efficiency of present payment systems, pursuing financial inclusion. But a major issue in ongoing research is about the infrastructure should be needed to operate a central bank digital currency. As the central banks started drawing attention to the dangers of global stablecoin, they soon realized that resorting to abstract concept is not a viable strategy for protecting their role. So the control of a reliable payment infrastructure is the best protection against unfair use data exploitation. International experience has already shown that the lawsuits can take a long time and may bring unexpected outcomes. Several trends are driving the development of a universal access device, as people need a robust and reliable way of exchanging money and defend the European digital sovereignty. The specification of a digital wallet for handling CBDC payments is an integral part of a debate about the central bank digital currency infrastructure. A universal access device has been proposed as a highly secure and reliable platform for storing all the personal data of its owner. In this regard, Fabio Panetta, executive board member of the European Central Bank, listed 4 directions for research on digital euro, the new retail-oriented central bank digital currency. In addition to experimenting the 2 new distributed storage technology, blockchain and distributed ledger, and enhancing the target instant payment settlement systems for real-time international payments, he put in evidence the importance of a new payment device, so the universal access device. So now I start the share the screen, and so okay. So okay. So now we have the first slide. We have the outline of what we are going to present relating to the universal access device. So we are going to have the design criteria, the hardware, software, and functional design, the support infrastructure, the currency circulation, the security requirements, players, and roles. So we have a problem and go ahead with the screen. Okay, so let's see. Are you going to see the screen? I think there is some problem. Sorry.
We are now on the first screen. Now in the second, user's perspective.
Okay, you're on the second, perfect, okay. So we are the universal access device design criteria. So the design criteria, we can talk about the user side and the institutional side. From a user side, central bank digital currency infrastructure design needs to find a balance among an easy use, so the improvement in the payment experience, and reliability and security, and privacy and anonymity. From the institutional perspective, so the institutional side, many issues are adapting present legislation to support the new currency and innovating enforcement agency in order to mitigate the risks of money laundering and terrorist financing. So, okay, we can see we have to check that we have an innovating legislation, European Central Bank's statute on the national laws like banking law, commercial law, and administrative procedure. Okay, so talking about the hardware design, we have a network module with a SIM card identification, an enclave computing module formed by secure storage, secure processor, a near-field communication module, and a hand-side touchscreen, and a video camera. So what do we know about the universal access device? First of all, it should be used with one end. So it should be only slightly larger than a credit card and slightly heavier too. It will also be a universal device. That's it, capable of making payment not only in digital euro, but in other digital currency as well. And having to manage sensitive data, it will be designed around the high security components based on enclave computer. So talking about the software design of the universal access device, the universal access device is a secure application platform hosting customizable graphic user interface, the so-called skins, user authentication, the CBDC wallet, online and offline payments, self-sovereign identity artifacts, and the possibility to have access to smart city service. So how I've just said, to identify its owner, it will be used one or more technologies, including the biometrics. In order to lower its battery usage, it will not depend on high-end graphic chips. This way, it will operate for days on end, even in the absence of support networks. For example, in the event of a natural disaster. That's why I put in evidence the possibility to be used, the CBDC wallet, online and offline payments. And smart cities, in the sense that smart cities could leverage this tool to offer new services. It could be used as a proof of identity or to store health data or other certification, of course, according to the principle of self-sovereign identity. So here we have the picture of the easy graphical user interface. So here we have the multi-use of the universal access device. Okay. Sorry. Okay. The functional design of the universal access device. The universal access device support executing payment in central bank digital currency and can be done with online operation, so person to business or through a QR code, with the near field communication, so online operation person to person, or with the e-card or universal access device to universal access device, or near field communication offline operation, like we said before, during, for example, during natural calamities. Can also be used for targeting subsidies like food stamp, transport aid, or proof of identity, so with driving license or ID card. So then we can say, we can see that talking about the functional design, the universal access device, it will be a partner of our day-to-day life, a citizen-centric device, a strong symbol of the single currency, and a tool for social inclusion. Even in the unbanked or those who are put down by smartphones will be able to use it. A device so smart can do a lot more than executing payments. It could be used to accredit pension or ad persona subsidies to specific citizens. It could be used as a proof of identity or to store health data or other certification, always according to the principle of self-sovereignty identity. So here we have user case to scanning to make an online payment. It will be sufficient to frame a QR code display on the payment page with the camera. And here, okay, we have a near field communication person-to-person payment. So to execute personal payment, just set up the amount on the payer device and then bring the two devices close together. We can have two modes of operation. There will be no double spending. So we can have an online operation and an offline operation. In the online operation would be an instantaneous update. With the offline would be our local storage and a deferral payback. And so it's very important that in the near field communication mode, the device will operate even without a network connection. So this is a very important tool. Okay, so the infrastructure supporting the universal access device is based on two components: a non-proprietary secure platform standard and a secure management network. And a very important characteristics is that it ensures that the software is released by certified producer, is always at the latest release level, and is operating correctly. So if we make a comparison with the smartphone, the main problem inside today's smartphone is about the protection of our payment data. As everyone agrees that our purchase history has a real economic value, privacy is no more an abstract concept. So allowing today's proprietary architecture to handle our payments open a door to many types of abuses. That is why universal access device is based on a non-proprietary platform. All this is made possible by the market improvement in the safety and reliability of the digital platform. very few expensive smartphones, if any, are supporting enclave computer chips and an open source software interface. So the indirect model of circulation for retail CBDC, we can have a quick look on this. So the central bank will issue central bank digital currency to commercial banks and to payment interface providers. These commercial banks and the payment interface providers will supply or lend central bank digital currency to citizens and legal entities. The universal access device will support the central bank digital currency retail transaction and defend European digital sovereignty. So we can see that our spending preferences, our decision as consumers and citizens, and our sensitive data are not a free commodity. So in this role, the higher security platform, the universal access device, will protect our digital identity and will safeguard the digital sovereignty of the Eurozone. The requirement, the universal access device security requirement, supporting the usual judicial proceedings, so seizure, denial of operation, bankruptcy, so the controlled operation, police investigations, auditing, and monitoring, and the detection and replacement of a malfunction units. So if the device is lost or stolen or hacked. So now we see the roles and the players for supporting the universal access device. So we have the European Central Bank and the commercial banks as issuer and distributors of central bank digital currency. We have the judicial power addressing specific universal access device users by their personal data. The universal access device management network, assessing, auditing specific universal access device by their network identification, and the monitoring and investigating authority, linking the judicial power with and the universal access device management network. Okay, so here we have the you see the implementing need to know security policy. As already described, a universal access device is a secure way of storing in the same place a network identification, an irreplaceable SIM card, and some user personal data, a set of self-sovereign identification artifacts. The judiciary power, the payment interface provider, and the commercial banks identify the user by their personal data in the same way they are doing now. Why we have on the other side the universal access device management network, who has access only to the network identification data stored on the SIM card. The only organization that will manage both network identification and user data, personal data, will be an independent authority. A renewed European level organization will be tasked with the monitoring of the network and the anti-money laundering and countering the financing of terrorism investigation. We can see and we can say that even the best user device will not work unless supported by a reliable payment infrastructure. So that's the problem of protecting our digital persona revolves again on the main issue of digital sovereignty. Somehow, surprisingly, both central banks and the fashion and luxury sector have expressed interest in this device. Probably the interest from central banks doesn't need any explanation, but luxury and fashion are backing that the universal access device will become a status symbol for the main money-savvy expert in the same way the smartphone became a status symbol in the last decade. Surely many security holes will be fixed in the next generation smartphones, and some manufacturers have already improved the autonomy and safety of their products. However, if people like Ian Rogers have decided to invest their skill in the universal access device, that approach is probably worth our interest. Thank you for your attention. Thank you for the opportunity.
Thank you, Rosa, for your insights on this special gadget that probably will emerge with the use of cryptocurrencies, stable coins, and CBDCs. And I'm certain that its use will make us think about privacy, security, and other problems, and even control by states and control by companies. But this is a very, very interesting idea. And now I turn and pass the word to Professor Elaine Kim, that will present us with a vision from the US point of view on the CBDCs and the discussions that are arising in the US.
Thank you so much, Andre. And it's really my honor to be here today. I am delighted to be speaking on today's panel to the Brazilian Bar Commission on Innovation. I know that Brazil right now is one of the most dynamic and important areas of the world for fintech transformation. As we can see from my colleague Rosa's example, Professor Rosa's ingenious device there seems to really cover a lot of the important issues. And I'm sure we'll have a very engaging discussion after our presentations. I would like to start by just again emphasizing, based on our discussions and investigations of many central bank initiatives as part of our Stanford Research Initiative, the fact that I myself have concluded that the open banking and sandbox initiatives that are currently happening in Brazil from the highest levels of the central banks, I really believe these are some of the most forward-thinking policy directives occurring in the world today around transforming banking and finance to promote greater financial inclusion. And I certainly believe that the procedure that is being followed to initially start with the kind of open innovation experiments and then link them to the evaluation of a national CBDC makes a lot of sense. So with that background in mind about the importance of Brazil's financial industry in a transformation happening, I would like to just share some brief remarks and observations of what we are seeing in the United States in terms of the regulatory outlook for CBDCs and related initiatives. And let me start by taking a step back and providing a quick summary of where things stand today in terms of US regulations. So as you know, the starting point for the US Federal Reserve is that they represent the incumbent interests of the world's largest, most prominent banks based on the current status of the US dollar as the world's dominant reserve currency. Approximately 80% of today's global trade settlements occur in the US dollar. So being positioned as an incumbent, the investigations underway in Congress and at the Federal Reserve can be viewed largely as what we might call a preemptive measure in response to the imminent developments of two major global initiatives that I'm sure all of us know about. One is China's digital yuan experiment, and two is the announcement of Facebook's Libra coin called the Diem, which is now expected to be launched commercially in 2021 first quarter. So I think it's safe to say that while there are many proponents of launching a federal dollar or US CBDC, there are also some potential drawbacks that are being studied as well. JP Morgan, one of the most prominent US banks, recently came out with a report in May stating that they believe that the issuance of a CBDC may undermine the hegemony of the US dollar. That was her quote, the hegemony of the US dollar as the dominant reserve currency and the primary means of global trade settlement. So these are clearly geopolitical considerations that weigh into the current policy deliberations on whether the US economy as a whole would benefit overall from launching a US dollar CBDC. If it does move forward, I believe there are it's clear that there are two pathways under consideration. So first would be what we call a direct distribution model to the end consumers for everyday payments. And certainly in the last 6 months, based on the developments under COVID, all of us globally have seen a move towards these kinds of direct payment transfer models for things like unemployment benefits, welfare benefits, food stamps, other kinds of government subsidies. So these would essentially be government to consumer payments done through direct distribution of CBDCs, primarily through what we call an account-based system. The second approach, which is quite similar to what Rosa was referring to in her presentation, is being advocated by a group called the Digital Dollar Foundation based in Washington, DC. This is an industry consortium, and they are proposing a two-step CBDC that would maintain the current distribution role of the commercial banks, who then would establish in the second tier CBDC accounts for their individual banking customers, and thus preserving the wholesale function of the commercial banks in that system. Now, like the US, many other countries around the world, of course, are also taking this kind of preemptive stance in anticipation of the Facebook Libra and also the digital yuan. Singapore, Hong Kong, Korea, Thailand, UK, France, EU, just to name a few jurisdictions, are, of course, all busily engaged in looking at how to respond to these same disruptions to the status quo. In terms of regulatory initiatives and how to respond from a regulatory perspective in the United States, I think the main initiatives that we've seen to date are primarily to address two issues that have yet to be clarified in the regulatory framework. One is whether these kinds of payment providers would require a banking license, and also a second set of directives intentionally and targeting the whole genre of cryptocurrency known as stablecoins. Just recently, about 10 days ago, the US Congress, or I should say one congressperson proponent, introduced a new proposed legislation in the US Congress called the Stable Act. Stable is an acronym that stands for Stablecoin Tethering and Banking Licensing Enforcement. And the aim of this new Stable Act, if it were passed, and remember, this is just a preliminary proposal for now, would be to address what the authors consider liquidity and credit stability risks posed by super stable coins like the Libra that could potentially disrupt the functioning of the dollar. So again, I emphasize that the Stable Act is only a bill that has been introduced to Congress. It will probably come up again in the next spring session. So it is certainly something that is being considered and debated. But the idea there would be to require that all stablecoin issuers would then have to get a banking license. Now, I think until now, the reality is because stable coins and even the rest of cryptocurrency as a whole have occupied a relatively small percentage of the entire payments market in the United States and also for international use. I think until now, most of these kinds of things have largely remained, for the most part, unregulated. I do believe that the launch of the Libra coin is going to continue to have regulators take a closer scrutiny at what kinds of regulations might be necessary to address some of the ambiguities in the current legal frameworks regarding the amount of capital reserve ratios, the quality of the collateral assets banking things like stable coins, and also the potential systemic risk posed if these kinds of coins become a very prominent part of our global settlement system. So down the road, I do expect that the Libra initiative, once again launched, will face additional legal and regulatory challenges, in addition to the ones I mentioned, also based on privacy and antitrust considerations. You may know that Facebook has already been engaged in a 7-year litigation battle with many federal agencies about their use of biometric data collection methods on their social media website. And it seems that many of those same principles may also potentially apply to the ways in which user data collection methods are done in connection with their new digital currency, which is privately issued. So taking these perspectives into account from the United States, if we turn back to what is happening in Brazil, which is a very dynamic fintech transformation scene, I believe that some of the key policy considerations and lessons that we can learn from comparing to other countries' CBD experiments and how those are tracking are the following 3 issues. First is, how do you design a CBDC that allows for global trade settlement in your local currency, but still protects against the risks of capital flight? And this is exactly the same balancing act or issue that confronts the Chinese government, given that, like Brazil, they also have what we call a soft currency, where there are restrictions on taking capital out of the country. Second is, in connection with the first point, how do you establish interoperability once you launch your national CBDC? Again, this is one of the biggest challenges for broad adoption of CBDCs, especially for soft currencies that have to compete against borderless stablecoins like the Libra coin or even the Binance Tether coins that are popular hedges used today in Brazil. So establishing interoperability both among government CBDCs, but also between government sovereign-backed coins and also private stablecoins is a big area of frontier and challenges yet to be addressed. And third is how to address the important policy directive of financial inclusion. Something I really admire about the Central Bank of Brazil's approach to transforming their banking and financial services industry is that they have really made financial inclusion one of the primary directives for all of these different methods. And this is a topic I am quite interested in terms of my own research at Stanford. And Brazil's initiatives are quite, I think, on the leading edge and quite relevant to, I think, how many of these policy trends may play out in the future, simply because of its importance in the global order as a country. So in summary, these are some of the key trends we are seeing in the United States on the regulatory and policy fronts. I'm really looking forward to today's engaging conversation to identify more convergence points between US and Brazil. Thank you.
Thank you very much, Hélène, Professor Hélène. And this is very, very important. The topics that you addressed are very important and certainly are the key issues that we are going to face and challenge in order to implement CBDC and implement this kind of ecosystem that we'll probably see in the future, in which stable coins, cryptocurrencies, and CBDCs are coexisting in the same economic field, in the same economic space. And this is very, this will pose a lot of hurdles, a lot of challenges and difficulties for every country, not only US, but every country is going to face these difficulties. And with this, I will call Professor Bruno Salama that could present we'll try to bridge these ideas of CBDCs, considering the US experience and some real and the specific applications of CBDCs that he already have scrutinized. Professor Bruno, please.
Just a few words in Portuguese, if I may. Muito obrigado pelo convite. Boa noite a todos.
Claro.
É prazer, uma honra, uma alegria estar aqui. Good evening to the previous speakers. It's a pleasure to be here. I enjoyed your presentation. Thank you very much. So CBDCs are coming, and central banks are undertaking extensive work on CBDCs. Sometimes it's just conceptual work, as in the case of Brazil, there's a discussion group, but increasingly it's practical development, and a few of the examples have been mentioned here previously. There's a striking result from a recent survey from the BIS, the Bank of International Settlements, that says that 10% of central banks worldwide say they're likely to issue a CBDC in the next few years. So that's 1 in every 10 central banks. And that is a major result. Now, what I want to do here is to explore what is driving the adoption of CBDCs worldwide by some, but also the lack of adoption by others. So let me start with some of the less consequential attempts of cryptocurrencies issued by central banks. We can call them quasi-central bank digital currencies, quasi-CBDCs. Let me start with the one that's probably the least consequential of all, the issuance of what's called a libcoin by the Central Bank of Lithuania. As you know, Lithuania uses the euro. And so one wonders what kind of cryptocurrency is the Central Bank of Lithuania issuing, given that it is not empowered, it doesn't have the authority to issue euros. So if you purchase this libcoin, what you receive is a digital token that can be exchanged for what they call a physical collector coin, and you can transfer it to other cryptocurrency wallets. But let's not get carried away here. This is representative of euros that the Central Bank of Lithuania cannot create. And so for all practical purposes, this is a cryptocurrency, not a central bank digital currency. Let's look now at a more consequential, a more telling initiative with crypto worldwide, that of Ecuador. So Ecuador, for the past 20 years, has had a dollarized economy. In Ecuador, you know, you go to the bakery, you go to the market next door, you pay in dollars. It's a dollarized economy. Ecuador no longer has its own fiat. But a few years ago, I believe in 2014, the Central Bank of Ecuador issued what they call dineros electrónicos, or electronic money. So basically, the idea is you give the central bank your dollars, and they issue an electronic token that is representative of a dollar. So in the end, it works just like libcoin. because it is not the token, the digital token is not a liability of the issuing central bank, since the Bank of Ecuador cannot print dollars. And nobody wanted it because there was not sufficient confidence in the Bank of Ecuador that they would not start operating like a fractional reserve bank, right? So they would know there was a fear that they would start issuing too many dineros electronicos that weren't backed by a one-on-one basis by real fiat dollars. So nobody wanted it. Ecuador dropped it. There's another similar story in South America, which is telling, of course, of how creative the central banks in the region can be, and how unsuccessful they are when they get too creative. The similar story is in Venezuela. Venezuela issued another, let's call it a quasi central bank digital currency. They call it the Petro. It was a mess. I was researching on it yesterday on Wikipedia. Seems that they were issuing one version of the white paper summarizing the initiative after the other, and it was a huge mess. It started in the beginning, you could buy petros with dollars, then you had to use rubles from Russia. And the idea was that you were going to have a cryptocurrency issued by the central bank that was backed by oil reserves. How exactly you access the oil reserves, I don't understand. And in fact, nobody seems to have understood it, which is why nobody wanted it. And so the Petro has not worked. Now, these initiatives, that the failed initiative by Venezuela and Ecuador, and the successful but not very consequential initiative of the Bank of Lithuania, they tell us something about what a central bank digital currency is. It gets to the topic of definitions, legal definitions, really, which is, maybe at least 50% of what lawyers worry about, right? What are we talking about? And so why are the cryptos issued by Venezuela and Ecuador and Lithuania not central bank digital currencies? And the reason is because they are not liabilities of the issuing central banks in the national fiat. There is a central bank officer a Brazilian central bank officer named Marcelo Prates, who is probably I would say the person in Brazil that understands best central bank digital currencies from a legal perspective, and more as a matter of fact. And he has a short article summarizing that. I want to encourage everybody to look into that. His name is Marcelo Prates. Anyway, what we call a central bank digital currency proper is not any kind of cryptocurrency that has some money mass, but rather a cryptocurrency that is a substitute for cash. So CBDCs are variants of central bank money. They differ from physical cash, and banknotes, right? Or central bank reserves, which are in fact for all practical matters, right? Or for all practical purposes, bank reserves are central bank digital currencies. They are wholesale central bank digital currencies, but they are not available to the public. So where do we find real central bank digital currencies if we can't find them in Ecuador, in Venezuela, in Lithuania, and perhaps elsewhere? Where do we find them? We find them in the Bahamas. The Bahamas has issued the first real central bank digital currency. It's called the sand dollar. What is the sand dollar? Basically, each person has to download an app, what we call an e-wallet, to store and transfer the sand dollars. And the sand dollars are legal tender, meaning that the owner of a shop cannot refuse to be paid in send dollars, right? He can refuse to be paid, reject payment, therefore, in any kind of crypto, but he can't say, I don't accept send dollars. So it's M0, like any other cash, right? M0 in terms of what kind of a monetary aggregate it is. Individuals, therefore, they have their cell phones, okay? And they will have in their cell phones 2 different apps for currency. One app is the app from the bank, the regular bank, where they have deposits. So what is more technically referred to as private money, right? So it's private money in the sense that it is the official unit of account of the country, right? The Bahamian dollar in the case of the Bahamas, or the reais in the case of Brazil, or dollars in the case of the US, or euros in the case of countries in Europe, and so on and so forth, right? But they also have in their cell phone another kind of cash, a cash substitute, but that is also legal tender, and that's the send dollar. And the parity is 1-to-1, and you can freely swap. So move money from your bank account into your e-wallet to get send dollars, and vice versa, within a certain limit. I think I understand quite in a little bit of detail, at least the first and only central bank digital currency that exists as we speak, and we can talk more about it in Q&A if you wish. Now, there's something very interesting about the Bahamas, but also something very puzzling. What's interesting is the stated goal. The stated goal is monetary inclusion. So the sand dollar was created with a view, the white paper says, the white paper written by the Central Bank of the Bahamas says to give greater financial inclusion, right? So you live in one of the 700 islands in the Bahamas, maybe a small one, and it's difficult to get cash. It's costly to move cash over there. Maybe the banks don't want to open an ATM over there. Fine. All of a sudden you're included in the financial system. You have send dollars on your cell phone. So that sounds nice. But here's what is very puzzling for me. Financial inclusion is not, as we speak, right now in December of 2020, financial inclusion is not a good enough reason for a central bank to issue a central bank digital currency. Let me repeat what I'm saying. Because I think this is important. Financial inclusion is not, as we speak right now in December of 2020, a good enough reason for a central bank to issue a central bank digital currency. Why? Because you can promote financial inclusion with much cheaper technological options. Just look at the M-Pesa, for example, that is used in Kenya, and many other alternatives, right? The PIX in Brazil, the automatic payment system that is used with the help of a central bank account that centralizes all the accounts made available to the public by the distributor entities. It could be M-Pesa or Alipay or WeChat as in China, or the PIX system that you have in Brazil. They are cheaper and they achieve the same thing. Okay, the central bank digital currency is a huge bazooka. It's really expensive. It's really complicated. If your goal is financial inclusion, you don't need it. There are cheaper options. And so I don't understand why the Bahamas is doing it. And I have a hypo. I can't prove it. You can call it conspiratory theory, but I think that the Bahamas is developing a pilot for some kind of private business somewhere that wants to make sure it works out in the Bahamas and then can offer the solution to other countries. That's what I must assume is happening in the Bahamas. Nobody told me that. I have no insider information, but that is what makes sense. Okay, so that's the case in the Bahamas. It's an interesting story. The story that's out there for the public doesn't tell everything we need to know to kind of understand what's going on. Then there's China. So China, we hear, is about to launch its CBDC. There is actually a pilot project out there. It has already distributed a few CBDCs. Some people have it in their cell phones. We read it in the internet. There isn't enough information about it for us to understand exactly what's going on. But if you research about it, you learn that the aim of the Chinese central bank digital currency is to replace all money, not just so the idea would be in China to be the first cash-free country, which is a radical idea, right? It's basically the end of cash. Now, besides that, of course, just like in the Bahamas, they want to do away with what's called fractional banks, basically monetary creation by banks. So, I mean, I can't get into the details here, maybe in Q&A, but the basic idea is the money that we use here in the US, in Brazil, in most places, the money is not created by the central banks. The money is created by the banks when they make loans. And so the Bahamas has eliminated fractional banks, and China wants to do the same thing. And many details are unknown, but we can think about their purpose, right? Why are the Chinese doing that? Now, the first thing is, it's not about financial inclusion, okay? It can't be, right? It can't be, because it is already a highly digitized economy, right? Alipay, WeChat have over 600 million users. And so, of course, you know, there are the usual arguments made in support of the adoption of CBDC to reduce the handling of costs of physical money, right? So transporting physical money is expensive. Brazilians will relate to that quite obviously if they think about the robberies that have been happening in the country. In the city of Criciúma, for example, recently, just this awful, massive operation by robbers to steal a huge amount of money. If all the money is digital, then you don't have to spend all this money in safeguarding physical cash, right? And then there is, you know, all these boosting transactional efficiency, increasing financial inclusion. There's all of that, but that's not the Chinese story. Okay, that's maybe the Bahamian story. They say it is. I don't really believe it. Who knows, right? But the Chinese story, there's more to it. And so what's going on in China? So in part, it could be a reaction to the coming about of Libra and similar initiatives, right? So it's just basically the central bank making sure that it is not, how do I put it? That it is not excluded from the game of money. And it's easy for us to understand how that could be the case, right? If we're all paying each other with cryptocurrencies that we use through Facebook. So now when the central bank issues new money, new dollars, new euros, whatever, we just don't care because we're transacting in Libra anyway, right? So it's so far at least, we understand that monetary sovereignty is kind of the integral part of being a state, with exceptions, of course, of dollarized countries, right? I just spoke about Ecuador, which is a good example. There has to be some merit to the argument that China is creating its currency to enhance monetary policy. So, for example, just think about what happened here recently in the United States. We received a check signed by the Treasury with money. The government sent money to people. It's called helicopter money, right? It's just money that they print and they send out to people and they say, spend it, right? And it should be easier to do that if people have central bank digital currencies, because the government does not have to mail checks to people in the case of the United States, which at this point sounds a little medieval, right? Or do it as the Chinese can do right now through WePay and Alipay and WeChat, right? Tencent's and Alibaba's gadgets, right? So it has to be that it's easier to do that through CBDCs. And more importantly, if it should happen that governments want to impose real nominal interest rates, I can give more details later on Q&A about that. But if the government wants to kind of tax your deposits, basically telling you if you don't spend it, we'll just take a cut out of it, it's easier to do that with CBDCs. And then there is, the very Chinese concern with surveillance. In the US, everything is justified in terms of preventing terrorism financing, which, by the way, is a real concern. I don't want to minimize the importance of controlling currency to avoid terrorism financing. But terrorism financing is sometimes used just as an excuse for the government to do whatever the hell they want. Everybody knows that. So in China, terrorism is not that big of a story. At the same time, surveillance is. They don't talk about it so much, but everybody knows it's a total state, a totalitarian state, and the white paper issued by the Chinese central bank, People's Bank of China, to explain their initiative with CBDCs. It's written in Chinese, and it looks like it talks about controlled anonymity, which already exists to some degree, I must assume, with WeChat and Alipay, but I can also we can all just assume it's going to be a bigger deal and easier to manage if they have just direct access to people's spending. And there's, of course, in the case of China, this strategic element, right? They've been talking about attempts to internationalize the renminbi. In other words, try to have other countries settle their foreign trade in Chinese currency rather than dollars. And it hasn't never taken off for a bunch of reasons, including because when they lift their own foreign exchange controls, what happens is there's a lot of money flowing out of China because wealthy Chinese just take advantage of the opportunity to ship their money abroad, buy an apartment in New York, buy a beach home in Portugal, and so forth. And so there is a long-term plan for China to internationalize their currency, and it hasn't been really successful thus far. May or may not happen, who knows, okay? Now let's talk about the US very briefly. The conversation about CBDC in the US starts out with this idea that they need to compete with Libra. because Facebook stable coins, right, Libra, is it doesn't want to displace other cryptos. It wants to displace national fiat, right, government money. And so the coming about of not the coming about of Libra because it doesn't exist, but the Libra proposal was really a wake-up call for the Fed, the U.S. central bank, because it's a direct challenge to the dollar. Everybody knows that. And you know, it's the same story that I was already explaining. If people transact in Libras, then the role of the dollar goes down. And the US is the country that has the most to lose if the national fiat goes down, precisely because, you know, as we stand now, the dollar is the international reserve. You know, if you're an Indian company importing whatever from Brazil, you need to buy dollars, right? So everybody worldwide needs dollars for foreign trade. And so despite of all the, you know, political problems that the US is facing, the role of the dollar has not been receding. It is increasing recently, right? And so the Fed needs to protect that. I think Helen in the previous explanation presentation made that very clear. And the other thing is, in the US, the pandemic seems to have played a role in the political elites thinking about central bank digital currency. And there's a lot here. I can't sort of talk about every detail, but a part of it is when the Congress passed the major stimulus bill that was enacted, I think, in April or May, or in the beginning of the year, authorizing the government to spend tons of money. In the original bill, the original proposal for what later became the CARES Act, which is this stimulus bill, there was a provision for the inclusion of what could become a central bank digital currency, since the Fed, as we speak, does not have a legal mandate to do that, right? There's no legal authority for the Fed, the Central Bank of the United States, to issue CBDCs. And I've written a paper called Central Bank Digital Currencies, The Hidden Agenda. It's available online. And it's a hidden agenda, maybe more hidden when I wrote and less hidden now. It's more obvious now. But there is a political agenda that is very strong in the United States that comes in tandem together with this idea of enacting or creating a CBDC, which we can use. There is this economic jargon, this term called financial repression. Financial repression, to make it simple, means that the government will control who gets loans. And so the idea is to transform, and in the United States, this is a huge idea. There's a lot of popular support for it. Whether it will become policy is a different story, but this idea of making the central bank some kind of development bank. Just to use an analogy with the Brazilian figures, it's almost like trying to make the Banco Central do Brasil the new BNDES, right? So the central bank prints money and just lends it to whoever it wants based on political goals, which the central bank in the US can't do, the central bank in Brazil can't do, most central banks cannot do, but they want to do that in the United States, many people at least. For example, this idea of the green projects, the green economy. So there's this idea of creating, of allowing the central bank to print money and lend to projects that are sustainable. Other people support similar initiative for what's called UBI, or Universal Basic Income, renda básica, we would say in Brazil, right? And even strategic sectors. So it's really joining the central bank and the development bank into just one thing. And now moving to Europe a little bit to continue my sort of survey about CBDC worldwide, you listen to Christine Lagarde, right? The former IMF president, the current European Central Bank president, and she is very open about it. She says, you know, we want to create a CBDC because we want to support a green economy. And that's risky. Okay, I can't talk about it right now, maybe on Q&A, but it's risky. For many years, the tradition in monetary theory is to say central banks can't lend directly, they can't finance the government, because that carries all sorts of problems related to misallocation and generating inflation, and also political accountability. There's all sorts of problems with that, but the Europeans seem to want to do that. You know, in my paper, the one I mentioned, I am against it. I think it's a terrible idea, but who knows? And finally, Brazil. Let me just conclude here with a few thoughts about Brazil. Brazil does not need a central bank digital currency right now, because the agenda of inclusion and competition has been taken care with what we call in Brazil PIX, right? Which is, you know, the Brazilian version of Alipay, WeChat, that is done by the government because there wasn't enough political coordination. Who knows why? But we couldn't do it with private banks. We Brazilians. And so the agenda of competition, right? Competition, I mean the risk that the government is just outcompeted by private currencies, has been taken care by the government with the PIX. And the PIX is a good enough instrument for financial inclusion. And so the central bank, I must assume, understands that very well, the Brazilian central bank. And there's more from the, you know, Brazil is completely different from the US and the European Union and Japan, because we have this risk of inflation in Brazil, which they don't have. So Japan and the US and Europe can print as much money as they want, and prices just magically don't go up. Nobody really knows why this is so, but that's what happens. They print money like there's no tomorrow, and prices don't go up. But that's not the case in Brazil, obviously. And of course, the Brazilian central bank understands that very well. I can talk about that later on. And so Brazil cannot play with issuing too much money. It has to wait and see. And the game in town in Brazil right now is peace. So let me just conclude with a very, very brief thought here that I want to leave you with. You know, the technology for CBDCs is available worldwide. Everybody can access it. It's not a big deal. Even a country like the Bahamas, right, a small economy that has actually been facing a lot of trouble because of tornadoes, and you know, the Bahamas was able to do their CBDC. If the Bahamas can do it, any country can do it, right? We must assume, or almost any country. So the technology is there, but not everybody is keen on using it, at least not on the same speed, right? It could be that in the end, everybody's going to end up with a CBDC. But right now, you know, the actual implementation of CBDCs depends on political arrangements and a bunch of other considerations of convenience, which are different from place to place. And I think this this kind of overview that I tried to deal here, or to develop here with you, where we spoke about Lithuania, Ecuador, and Venezuela, Bahamas, Brazil, European Union, the United States, and China. I hope it can be of some use. Thank you very much.
Thank you, Professor Bruno. It was a a great panorama on the idea of CBDCs in many countries. And I think that this is relevant because we can see that we don't have a silver bullet. We don't have a unique model of CBDC, a unique form of implementation of CBDCs. And with this, we can go to our Q&A session, and I will address questions made by the attendees. And if you prefer, also we can make questions from the panelists, from one panelist to other panelists. And I start with a question that was sent by Professor Rosa Baresi. Since last summer, we saw a lot of merger and acquisition activity among the European payment companies. Are they innovating, or is it just business as usual? And I will start in the same order of the presentations. Professor Rosa, if you can answer your question or comment on your question.
Yes, it would be a pleasure. So I would like to answer this question thinking about the Italian situation and from Italy to Europe, of course. So the thing that merger acquisition, so that we start from there. So there is this consolidation is really needed in the respect that the European landscape has never been a happy one in this context. So we can point out that Benoît Cœuré, was previously on the board of the European Central Bank and now is with the Bank of International Settlement, was constantly criticizing the dispersion in the European personal payment industry and the lack of the European market maker like Visa and MasterCard, like we have in the US. So the merger that happened in Italy at the beginning with the Italy-based Nexi, the Italian biggest payment group, merged with the Italian-based SIA, and then bought the Dutch-based Next in order to become a European pay tech leader. All the agreement on this start in the summertime because in Italy seems that the Italian banking sector like to do this when employees are in vacation. Anyway, was just to say that. But apart from the economies of scale that can be obtained by consolidation process, there is a strategy behind all this. I would like to connect what the Professor Bruno said, except from the cases for the very small country like the $1 project in the Bahamas, a central bank cannot afford to directly operate a retail central bank digital currency. So it's important to have a reliable and secure payments terminal network. I think it's critical for the operational control of a central bank digital currency. The problem is that central bank cannot own that infrastructure, both for the way they are structured and for the statutory architecture. So central banks have to recognize that they need to outsource some of their tasks to the operating payment network. So like Professor Bruno mentioned before, we have to make our compliments to our host for the new instant payment system PIX, which is directly controlled from the Central Bank of the Brazil. And we have the same things with the China, with the Union Pay now, and the Nexi for Europe. So that is the situation.
Okay. Professor Hélène, do you have some comments, some thoughts on this issue?
I'm curious about, I really enjoyed hearing Professor Bruno Salama's global survey there of all the different policy considerations. I'm just wondering, for the case of Brazil, how do you think, if you did launch a CBDC, that would impact the current concerns about devaluation of the Brazilian real? Like, would it help or hurt the devaluation if you actually have, I mean, we don't want devaluation, of course, but would it actually protect against devaluation if you had a CBDC launch, or would it actually make the situation worse, if you had to guess?
I think it would make the situation worse to the extent that it would be perceived as an instrument for looser monetary policy. In other words, an instrument for decreasing interest rates and perhaps starting more heterodox initiatives such as helicopter money and things like that.
Yeah, thank you. I think that's a really important point you make.
Yeah, and this was a doubt that I was noting here. Using a CBDC is better for the monetary policy. What are the advantages? What are the reasons in terms of monetary policy to use a CBDC? We know that CBDCs have a lot of, or at least could have a lot of objectives and a lot of goals to seek when using and emitting CBDCs. But for the usual monetary policies, this is better, this is worse. What do you think about it?
Well, in the current state of affairs, the main concern, especially during the pandemic, is that spending is going down, right? People are not spending money. So monetary authorities want people to spend more. And the way they do that traditionally is through the banks. So they create the mechanisms or the incentives for the banks to make more loans. And as the banks make more loans, there's more money in the economy. And so there's more spending and prices don't go down and unemployment doesn't go down and so on. Now, the problem is we live in a world where the banks don't want to lend and the people don't want to borrow. And this is why, for example, in the United States, they are printing money. Of course, the money is not printed. Printing money is just jargon because it's how it used to be many decades ago. The money is just created. It's fiat money, but it's digital money. So the government creates money, it got to a point here in the U.S., at least, where the government had to send checks to people. And so the way in which that connects to CBDCs is, well, it would be easier for the government to send money to people if they could do that just by, for example, adding 10 on people's bank accounts, right? So that's the first way in which CBDCs relate to monetary policy. The second way is because, in theory, the central bank could create what is called negative interest rates, which basically means that you go to bed and you have 100 reais in your bank account, or it's not even a bank account, right? It's a central bank account, or it is a bank account that is pegged one-on-one to a central bank account, right? Which are the two alternatives for central bank digital currencies, right? So you could have people holding money in a bank account with the central bank, or you could have people holding money in a bank account with a commercial bank, but for every dollar that you deposit in the commercial bank, there is $1 under your name with the Central Bank of Brazil, right? Or any central bank, sorry, it doesn't have to be of Brazil, any central bank. Anyway, and so you go to bed and you look at your account and you have 100 reais or $100 or 100 whatever. And then you wake up and you have 99. And so that's negative interest rate, which is like a tax on money. It's almost a property tax or a confiscation or a wealth tax. You can frame it however you want, but it's basically the government taking out your wealth. And the reason they would do that from a monetary policy perspective is to make you spend your money. So, you know, instead of waking up tomorrow with $1 less than you have today, you're going to spend the $1 today. So spending goes up in the economy. That's the, you know, that's the idea behind a negative interest rate. So that's the way in which CBDCs relate to monetary policy.
Okay, Professor Rosa, do you have some comments, some thoughts on this issue?
Probably we on the other side can see that the way and means will probably see improvement as CBDC are more sensible and sophisticated medium of implementing monetary policy.
Like a kind of automation of monetary policy. Do you think this is possible to automate or to use, for example, smart contracts to make this limitation on the emission of the CBDCs and automate some of the operations?
Yes, yes. We can have containment means. Yes.
Okay. Professor Hélène, do you have some comments on this issue?
Well, I think it's this whole discussion about negative interest rates is quite interesting certainly for stable coins, because you have to think about, well, if the issuer of a stable coin is basically in many cases making money on the float and they actually have a negative interest rate to work with, then how come they can even stay in business? So I think that definitely impacts the stable coins. Going back though for this question about, I think Bruno, you asked this question about why the Chinese government is, you know, why do they even need a digital yen? I think personally it has a lot, I mean, not personally, but I think in terms of my own observations, it probably has a lot to do with global trade policy and their One Belt and Road initiative, and probably the intention or the desire to try to create kind of extra jurisdictional areas where their currency is used in global trade settlements instead of, for example, the US dollar. And I think that's where the geopolitical kind of tension can arise between the CBDCs, competing CBDCs, and why it almost feels like a nuclear race sometimes, where like every country as a purely defensive mechanism seems to think that it needs to have a CBDC and that they feel some pressure to create one regardless of the benefits or the risks. I'm curious about your thoughts on that.
Well, I think in the limited context, and it's limited, but it's not small, the limited context of the One Belt and Road initiative, then China is already able to force the use of the renminbi. Mm-hmm. And so I don't see why the digital currency per se would make any kind of difference. But I can understand that if the currency is practical, it could be perhaps increasingly adopted elsewhere. What I don't understand exactly is the interplay between an increased adoption of the Chinese CBDC and their capital controls. And so this is, I don't know if you have any thoughts on that, but I don't understand.
Yeah, actually, this is a topic I spoke about on another panel yesterday with some peers here in the United States. And it's a topic I've given a lot of thought to, simply because when I was at UC Berkeley on the law faculty many years ago, I had the opportunity to work with a number of state-owned enterprise leaders who are in charge of this kind of Belt and Road Initiative, working on global expansion, helping them understand legal regulatory frameworks. And what occurred to me is that, like you just said, there is this striking tension potentially between, on one hand, the capital flight controls and restricting the currency to its borders, but on the other hand, wanting it to have this extraterritorial reach. And what I realized is that if you use the programmable money approach, it is potentially possible. And I'm not the technology expert on this, but I think it may be feasible to issue a CBDC that on one hand would address the need to restrict the circulation to a domestic user base and basically digitally impose that border control. But on the other hand, you can channel that same token. This is just my own idea, to channel the token through the SOEs and have them use it to settle global trade accounts and thereby facilitate a faster cycle of, because they have a lot of vendor payments happening everywhere in the world. And as you know, they want to create kind of a monetary empire in a sense. So that's what occurred to me, is that the ability to design a programmable money specifications that allows for these bifurcated use cases for consumers to be restricted to domestic, but then for the business channels to use it for overseas payments, that seems to solve two major problems for them. That's just my guess.
But for all practical purposes, if you have this programmable money, you are de facto creating two monies. A money that circulates domestically and a money that circulates abroad. And whenever you create two monies, my experience with foreign exchange controls in Brazil, which I used to experience on a daily basis as an attorney many years ago, was that people will always act creatively and think about ways to circumvent it. And that's obviously not a Brazil story. That's how it is everywhere. Capital controls do have this problem of circumvention. I don't really understand how the Chinese economy works, and maybe nobody does. My understanding is that this highly regulated economy with SOEs everywhere, I think the Chinese are very creative in the sense that I am suggesting here, in terms of also being able to work with the system in a way that lets things happen the way is necessary. And so I think there is a tension between what the government wants to do by means of creation, programming and regulation, versus how people circumvent these things. But maybe money is sort of this ultimate regulatory tool that cannot be circumvented because it's programmed in so many ways that, you just finally have the perfect capital controls. They can't be worked around by the people.
Well, the reality is, even before they launched the CBDC, they have, from their perspective, a pretty big problem because, people are buying houses using their Alipay. They go to, like you said, to New York, they pay for $1 million on an Alipay account, right? And just transfer it through, it's not even a CBDC, it's not even a stable coin, just through Alipay. So already there are such porous boundaries and big loopholes in the capital controls that I think in some ways migrating the domestic circulation base to a CBDC from an incentive standpoint, makes a lot of sense for their purposes in terms of imposing this kind of capital control. The question is, how do you do that and at the same time allow the money to circulate outside for business, for trade settlement? I think that's really the key. And I would not be surprised if they have come up with some kind of programmable money or algorithm or something that allows them to do both, even though it seems counterintuitive. So that's just my own idea.
So money that is free outside of China, but not so free inside.
That's right. We should write a paper on it, actually. This is a very fascinating topic. This is what I'm studying.
Dual-faced money.
Right. Yeah. The two faces of money in China.
The two faces of money. Yeah. And maybe as a kind of intention to gather and to gain some monetary geopolitical force and influence in the region and abroad, but I don't know.
Yeah, but I think Brazil, as I said earlier, there are some parallels also with Brazil, because you also have soft currency, you have capital controls, you want to conduct trade in your own real. So I think there are some valuable lessons there to be learned, and I do believe that if we have these CBDCs, we are moving to an increasingly multilateral trade world view where all kinds of countries are going to start making direct their own currency-based trade settlements, and that will definitely impact the current status quo as it stands now.
If I can add just a small thing, you're referring to Brazil and China as countries with soft currency. In the sense that they have foreign exchange controls. There is, however, a difference in the sense that a programmable money structure along the lines that you have suggested here in Brazil just sends a very negative signal. The perception of it would be, I must assume, very negative.
In Brazil?
Yes.
Because why? I'm curious.
Well, because it signals that the government is just increasing its ability to force you to keep your money inside of Brazil. And so in reaction, people say, aha, so let me take it out from the country as quickly as possible, because the new trend is one where they want to revert the trend of the past 30 years where capital controls were softened. And now you want to, kind of imprison the money back in the country again. You want to go back to what we had until the 80s. And that kind of thinking is always in the minds of regulators in countries that have soft currencies that are really soft.
I see. Yeah. So do you think all of that would then invite more a focus by consumers on dollar-backed stablecoins in Brazil? Do you think dollar-backed stablecoins will become like the ultimate hedge against devaluation and also border control?
Well, in Argentina, for sure. Right? It turns out that Brazil has been able to avoid the kind of inflationary waves that are pervasive in Argentina. And so the ordinary Brazilian saves in reais, whereas the ordinary Argentinian does not save in pesos, right? The small savers, right? So the individuals, they have a couple of pesos in their pockets. They rush to exchange it for dollars. And that's not the case in Brazil for a number of reasons. And so this is really what the daily fight of the central bank of a country like Brazil is, to make sure that we do not become Argentina in this specific sense.
Right.
And in this sense, I will open the question for Courtney Guimarães. Courtney Guimarães is a friend of our discussion group, is always present, and now I pose some interesting questions on the use. He's very accustomed to the crypto markets, and I'm certain that he will make a question that goes in this way. Courtney, could you make your question, please?
Hello, good night, good afternoon, and good morning for everyone. I have no clue idea where they are. I was just in a Latin America BigConf conference today, and I was just talking about central bank digital currencies as an instrument of South America integration. That was the discussion, with using the case of Uruguay and our friends from Argentina. But my question is for Professor Aline. Stanford has a King College Club, which is more towards kind of policies and macroeconomic policies towards the difference between advanced countries and what we call it emerging countries, or what I call slave countries. So there's an old paper from Professor Kapoor. It's about the policy coordination and the role of central banks coordinating policies between advanced economies or advanced or powerful economies, and what was called in 2014 the emerging markets before the BRICS terms and everything. The way I see CBDCs for Brazilians or South Americans is much more a defense tool against a new digital imperialism. And my experience with China, it's literally inside of China. I've worked with guys from Cosmos, the friends of Professor Bruno from Berkeley, and China has chosen Cosmos as the main infrastructure for the global blockchain network inside China. But the new CBDC is not based on blockchain,
Right.
and there's a reason for that. The reason is CBDC is digital, and every currency is digitalized. It's inside of the banks. It's digital money, period. It is not 100%, but it's digitalized. If the Central Bank of Brazil wants to forbid everyone to take the money out, it's just a key, period. So the money is locked in, because all the banks has his own accounts in the central bank. China has made the same. There's a slightly different animal that we're discussing in the market called central bank cryptocurrency, which is literally a slightly different animal, which is a crypto token, as any other crypto token, that can have the same characteristics you're talking. Meaning, I can print a token with a triple signature on this token. Me, my bank, and the government. And depending on my behavior as a citizen, I can have the same currency free in the world, or stuck in my own country, or literally controlled for some purpose. For instance, I can let part of my money disposed for inheritance for my children, and I made a contract with my bank, and I say, guy, this money I can't touch, period. So I sign a paper, let with the bank, and I can't do anything anymore. It's my inheritance, is donation for my kids. And this is all possible if I have a government with the guts and courage to print such kind of money, which is an equivalent form of bullion, meaning we have digital gold, which instantly we don't have all the fractionary levers, all the debt levers, all the things Professor Bruno was talking about. Okay, there is one place in China where they're testing that. It's a small Taobao from Alibaba. I forget the name of the canton or whatever, but there's a small town where they're testing that. How you see this in your studies in Stanford? Because I know that in Stanford people are studying this kind of movement, which is the money 6.0 is literally the digital money. It's not the money the way we know today. It's a new money where the digital controls, the codes, the algorithms can have a secondary layer besides the economic layer or the legal layer you see.
So when you talk about the layers, are you referring to various embedded, embedded provisions, for example, for like privacy or for surveillance or for monitoring? Is that what you mean by like the digital layers?
I am a computer scientist, whatever you want.
Okay.
Software to me enables anything.
Okay, so your question is how are we studying it, or what is our view of it?
Yes, both. If you're studying, and again, as I keep saying, your personal view about that.
Sure. So I would say that the King Center is a very prominent policy department based at the Graduate School of Business. Actually, one of our top faculty advisors, Professor Daryl Duffy, who is a leading authority on CBDC at Stanford and who has done a lot of work with the UK, the PSD2 initiative with the Bank of England. He is a member of that King Institute. As I understand it, that institute is primarily addressing, as you said, economic disparities and the goals of financial inclusion. So it's not really looking at digital money. The reason that I, as one of the co-founders of this new digital currency initiative at Stanford, that we started establishing back earlier this year, and I should mention that one of my co-founders and our program manager, Max Youngrice, who is also from Stanford, is here on the call with me. He's the gentleman there in the purple shirt. So maybe I'll let Max say a few words too. But basically, we started this new initiative because we wanted to create a cross-disciplinary framework to look at not only the technology issues, but also the policy and regulatory challenges that remain, particularly around what we call interoperability. We think that, as I think other people pointed out, a lot of the token designs and implementations are already open source, so it's not like it's not difficult for anyone to create a CBDC. It's really a question of, okay, if you were going to create it, why are you creating it, and how is it going to work, especially as it functions with other CBDCs in terms of interoperability and other payment systems. So that's kind of the mission statement of our digital currency initiative, this kind of cross-disciplinary approach that looks at the technical as well as the policy regulatory frameworks to drive interoperability in particular. Max, did you want to say something and just say a few words of hello?
Sure, yeah. Well, I've been listening for the last, I guess, almost 2 hours. Very fascinating discussion. So thank you to all the speakers for the very insightful comments. But I think Helene did a very good job of summarizing exactly why we created this initiative and what we aim to do.
Mm-hmm. Yeah, so if you have, Courtney, if you have thoughts and would like to engage with us and, propose a collaboration, we're very open. We really want to make this really a global kind of initiative because, CBDCs definitely are a global game.
Yes, probably we're going to be in touch based on my studies and my school. And again, it's computer science. But we have a close relationship with Berkeley also here. The law school is closer to our friends in Brazil. We have several Brazilians on there and working on crypto and everything. And Diana, Andre, and the other guys in Curitiba, they're kind of leading the initiatives in our bars around blockchain. They're studying that for the last 2 years. And the subject of this semester is just CBDC. But they're talking about tokenization and other legal issues and things like that.
I'm curious, you made the comment, I have a question for you, which is you made the comment that you pointed out that the Chinese version and also the Brazilian version, PIX is definitely not a DLT, but why do you believe the Chinese government decided not to use a DLT?
Because they're not building, and it's not believe, I know the information, they're not building a CBDC. They're building what we are doing with PIX. In fact, there are 3 things the Chinese are doing. They're trying for the inesimal time to get rid of what we call the shadow banking system. Chinese started with the virtual credit cards in 2002 because they don't have credit cards. So the e-commerce guys must have a way of payments. So they have what we call the digital banking accounts, and that's it. So they're not in banking. They are in the biggest e-commerce players. So this is shadow money. The second question is, the shadow money now is getting a kind of a slightly touch of Occidental greed, meaning loans. And just together with the lockdown of the IPO of Alibaba, they just published a new legislation about how to do micro loans. Why? Because China is a highly digitalized country. And I'm working with the Brazilian China Chamber of Commerce here. And sometimes I feel like I was a Flintstone in Bedrock. We're talking about e-commerce. There are people doing 300 different lives at the same time with 300 5G cell phones in front of them. So that's the idea in small village. So China is trying to grasp that, but not in the sense we say, oh, it's the big brother. No, it's just normal financial policy. The second point is they want to take over the dollar, period. So that's the narrative everyone is buying. And having a digital system, not crypto, digital, we will allow them to make all the trading bridges they have around the world easier. And what I mean by easier, if I have a map about Chinese investments around the world, which is they have huge investments on Africa, huge investments on South America, like the biggest petroleum reserves in the world is Venezuela. It's not Arabic and everything. So, and we buy everything from China and we sell lots of commodities for China. So if I want to buy all the stuff I'm buying for my kids for Christmas on China, I can pay dollar, taxes from Brazilian system, which is a crazy one, and taxes from financial system. If I have a friend in China, I just buy digital yuan using whatever I want, including Bitcoin, and I buy everything with digital yuan because China is not going to forbid me, that I'm a kind of a 5 years old WeChat user, to have a wallet with the digital yuan. They're not going to forbid it. So instantly, I'm going to create the Chinese shadow global banking system. And they're doing that under the radar because they're looking for the poor people. And one thing that the Occident doesn't grasp is China is the most efficient machine in the world to digitalizing the poor people because they're state-owned, period. They're not looking for profit. They are looking to enable an army. They have 1 billion people digitalize it. And when I mean digitalize it, is having Huawei P14 cell phones, Huawei notebooks, more powerful than my MacBook Pro that I use, and then things like that. They're paying for that. A digital citizen, a regular digital citizen, is a commerce point, kind of a high-enabled digital citizen, as they said, like someone with 25 PhD or whatever, is a weapon. And it's the most powerful weapon they have today. Smart people working all around the world and outsmarting everyone. And again, it's a long-run plan. So these three things together are a massive strategy, but they're not a single strategy. It's a government strategy. The government strategy is the Empire of China, long-run strategy. So it's just a piece of that. And while we are discussing if Brazilian Central Bank can print money or whatever, they don't care about that. They're printing money in their style. They care about in the next 50 years, we need to learn Mandarin, period. Why? All the factors are in China. All the money supply are coming and going from China. And the physical supplies are coming and going from China. There's an example. We have an iron exportation business here, a huge one, on Vale. Vale built 5 huge, massive ships to be like kind of floating deposits of iron. China just docked all the ports. The ships can't dock on China, so it was useless. Basically, this is the kind of war, long-run war we are facing, and for me, Occident is not prepared for that. We lost the war by several kind of baijiu bottles, as I keep saying.
Fascinating. That's absolutely fascinating.
I just came in to make this question and to put on to another meeting, and I have another meeting just now, and I'm really sorry, but I will see the recordings, and Diana has my contacts, and I will love to be in touch with you again to discuss about that. As I said, my PhD is a computer science PhD on ontology for digital currency, and despite the fact I'm just writing code on Cardano platform, by the way, I need to write lots of papers about the kind of discussions we are having here.
Right, fantastic.
Okay.
Thank you.
Thank you, Courtney.
Thank you,
Thank you,
Courtney.
Bruno. Thank you, Max. Bye-bye. See you.
Bye. See you.
And changing the mood, and going to the end of our discussion, I will just pose a last question that was made by Luana Varasquim Perim, that also is member of our discussion group, and she entitled herself as a dreamer. So her question is more utopic, and just to contrast from the vision of Courtney. Do you see a future where we could actually eliminate money transfer friction between individuals, and companies on the globe without the need to rely on third parties like Western Union, PayPal, and the likes, improving exchange efficiency, market efficiency overall between individuals, maybe addressing KYC and related issues to a central entity within WTO, for example, but really taking advantage of the DLT's features, or that vision could be too utopical, much like Barrow's vision on cyberspace. This questions is addressed to all the panelists. So who wants to start making some considerations on this? Here's Luana.
I can start. CBDC is all about disintermediation. Sometimes disintermediation is good for end users, sometimes it's not. Luana seems to believe that it is. It's her utopia, to refer to the word that you just employed, André. Now, Luana's utopia is the intermediary's nightmare, because disintermediation may or may not be good for end users, but tends not to be good for the intermediaries. Now, the intermediaries are not a small player. It's the banking industry. And that means that we're going to have a huge fight, at least in two respects. First one, suppose in my cell phone, I could do like the Bahamian user, and I have two apps. One is Bank of America. The other one is whatever bank that offers me the Sand dollar or the Uncle Sam dollar or the Samba Real or whatever. There is a fierce competition about which one I choose, because whichever I choose gets to use the float for my deposit. And second one, there is the dispute about fractional banking. So not to get too technical here, but money is currently created by banks, most of it, right? Central banks just create a small portion of it. Most of the money is created by banks. And disintermediation means that the government may or may not want to have the initiative in creating money and taking it away from this industry that we're calling the intermediaries, but we could just refer to it as the banking industry. That is going to be a huge fight. And the paper I wrote, I'm not a big fan of taking this power away from banks for reasons that I detail there, and I don't want to get into details here. But just the overarching idea is, here it's a zero-sum game. One's utopia might be the other person's nightmare.
Thank you.
I just want to add that non-monetary problems are the best type of conflict. Just that.
And Professor Aline, do you have some thoughts on this question?
Yeah, I think Bruno summed it up well. I think it really is about the incumbencies, and I think certainly in the United States, it's going to be it's not going to be an easy win for anybody to get around all the big commercial banks that might be disintermediated by these kinds of direct payment systems. And like he said, we have to think about the flip side, which is the way the system is supposed to work is that you take in the deposits and then you do the loans. Well, we saw the example with Alipay, for example, when they tried to get into the peer lending model, it's not unproblematic. There are definitely problems that come up when you have individuals lending money. So in other words, it's one thing for you to send money to each other, but it's another thing for individuals to be lending money to each other. So there seems to be kind of a flip side to that. And maybe that's why we have banks. things, and maybe that's why we need banks. So I would have to say that I'm a little skeptical that we will ever move away to a completely disintermediate environment, and also because the reality is we need intermediation to create jobs for every economy.
Okay. And with this, we come to the end of our session. I'm very grateful, and I speak in the name of the Innovation and Governance Commission of the Brazilian Bar in Paraná, in the name of our discussion group. I think that we reached our goal of discussing very important topics and spreading the ideas, spreading a lot of thoughts on the subject. And with this, I open for final thought, for some final thoughts for every panelist.
I would just like to thank Andre for taking the time to so carefully organize this really very rich discussion among all of us. I think we covered the entire globe between our panel and many different important topics, as you said. I mean, it's really my honor to even be part of this. And I really hope this will be the beginning of a dialogue that we can create, you know, through all of our time and energy and resources. I mean, in some ways, despite the terrible things about COVID, the great thing is now in some ways, it's actually easier to connect to people around the world. So it's just fantastic that, you know, here we are in like all these different countries and we can just, you know, just so easily connect and share our ideas. So I'm very thankful to Andre in particular and to your Innovation Commission for giving us all this opportunity. Thank you.
Thank you.
I join Alain. Thank you very much for the opportunity. It was a very fruitful discussion. And I really hope, at least speaking for the European country, that we are able to create an infrastructure that deal with all the problems for the issuing of central bank digital currency. And again, to implement a universal access device, could be a citizen-centric device, a strong symbol for the single currency, and a tool for social inclusion. And I think this the last element is something that Alain like particularly. So thank you very much for the opportunity to all of you.
And if I may say, I want to say I'm not an enthusiast of CBDC. I'm not part of the hype. I think it's a weapon of mass destruction. No, I'm just kidding. But really, I'm not an enthusiast. I am not convinced that it's needed. I'm not convinced that it's good. And so far, I don't really like it.
Thank you. But that's the idea, to have different points of views.
Somebody has to dislike it.
Yeah. And we have to have these discussions and this difference in views in order to evolve. Thank you very much for everyone. Thank you for being with us, and have a good evening, everyone. Have a good night.
Okay, bye-bye.
Bye-bye. Thank you.
Bye-bye.